Good morning, David Coombe here with the Tuesday, the 9th of August AM debrief. Just coming up towards 9 AM here in the Sydney office, and really looks like we're in for a big one today. Certainly equally, or at least as big as some of these recent declines that we've seen Friday and yesterday. Overnight, the US markets saw a 5 and 6+% moves to the downside, so really just utter panic gripping the markets there and exiting really any opportunity to exit was seized, and looks like most of that money is going straight into cash and bonds, and we're seeing the bond yield drop as a consequence of that. Some US dollar strength, and let's have a look at those actual numbers here. The Dow having its I believe it's the sixth biggest fall in history, so getting up to the levels that we saw on the during the GFC and back in Black Tuesday back in the 87. So number here for the Dow, 634 points, or 5.55% of the S&P 500, the broader measure, off even more, 6.66, and the Nasdaq 6.90. Toronto a bit less so, and the rest of the Americas, well, Brazil actually most of all, 8.08, so a big move there for what is largely a commodity economy. Perhaps doesn't bode that well for us there, if we're to draw any conclusions from that. Then in Europe, slightly more subdued. They would have been finishing off their session as the US opened there, so really not driving the falls here, but certainly following through from our closes here in Asia yesterday. The FTSE 3.39, all those riots going on over there in the UK, perhaps not helping things terribly. Don't really know. The CAC 40 4.68%, and the DAX 5.02, really coming off pretty hard there for Germany. Our close yesterday saw us down 2.91%, or 119 on close. We had a bit of a roller coaster day there. Pardon me, at one stage just prior to lunch, the market was only down about 20 or 30 points, and it looked like we might have been seeing a bit of a floor there, but that proved to be premature, and we certainly continued on down there pretty much throughout the rest of the day. The Hang Seng down 2.17, and the Nikkei 225 down 2.18. The futures here are looking like we will see the 3,800 level or thereabouts. So I know that's been talked about as a next level of support here. I guess we'll just have to wait and see how far this route really goes. Okay, to look at our commodities now, West Texas now down at 81.03. Natural gas, for all intents and purposes, is flat. The rest of the soft commodities space is pretty much down without exception. Big movers there were cotton down 3.8, orange juice 5.16, wheat 3.91, sugar 2.03, soy 1.83, lumber nearly 2%, oats 1.37, soybean oil down 2%, being the major movers in the softs space. Okay, copper 3.3 cents down, just 0.83, and I think Jono's talked about the Escondida industrial action, the labour problems going on there in that big mine in Chile. Once that comes to an end, we should see copper really tumble. A month or two back, that would be up here at 17.21. I would have been a doubter, I suspect. So that's up a further $8.4 here to 1,721. Silver just dropping back here a bit. Could be a little bit of chance here to buy on dips, because that ratio between the two has been separating as gold's pushed up ever higher. The other precious metals to look at is platinum and palladium. and see what they're doing as well, to see if you can get a good entry there if you were wanting to look at any of the precious metals there. Okay, currency pairs. Euro buying 1.4172, the pound 1.6326, the yen, US dollar buying 77.6395 yen, the Aussie buying just 101.62. So I sort of missed the opportunity to lock in a bit of a holiday hedge there, buying at 110. But perhaps in time this will seem like a good value and a cheap US dollar buying if things keep up the way they're going. US dollar buying almost 99.25 Canadian, so that's a huge turnaround. On a percentage term, I'd be inclined to say possibly more than against the Aussie, but I'm not sure about that. And now the US dollar is buying just 3/4 of the Swiss franc. Pretty amazing number there. Okay, let's have a look at the economic calendar here, and then we'll move on. Have a quick look at a couple of shares there. Not that would seem to be prudent with this volatility jumping into anything right now. Sure, I don't need to tell anyone that. Okay, so we've got some Kiwi housing sales data out, some GDP numbers for the UK. We've got more GDP, credit card spending numbers, house balance numbers out of the UK, home loans and business confidence. Now, it'll be interesting to see if business confidence has been affected in recent weeks, or perhaps that's a little bit too early, being the July numbers, to have seen any of what's washed out in the last week or two come through in those numbers. Big numbers to watch here coming out of China this afternoon, before noon, and then at noon is CPI, so that's an idea of how they're taming inflation there. Industrial production, retail sales, so some pretty important numbers here collectively. Then we've got consumer confidence out of Japan and Switzerland, trade balance out of Eurozone or Germany, machine tool orders out of Japan, and then we've got some UK industrial production and industrial manufacturing production, trade balance, and housing starts out of Canada, taking us through to Wednesday. I've got Red's decision to be mindful of tomorrow, but given what's happening, I think it'd be a fair bet to say that that's going to stay in line with consensus at 0.25%, and I won't go through all of those numbers there for tomorrow. Okay, let's move on and take a look at the economic, sorry, we've seen that, the Falcon Trader here. This is our gold to US dollar, and this AB move here, a little bit of dip back. I'm just going to pause this for one moment. Okay, sorry about the interruption there. We were just looking at gold here, and the fact that we had a Fibonacci AB pull here back to the 764, and then through to this extension here, which is just taken out. It looks like this is just going to keep on powering on while the turmoil exists in the equity markets, and it's pretty much the only game in town, it seems, as far as people's comfort there. So we're going to see any follow through at some of the local gold stocks. They've been pretty comprehensively sold off, just as you'd pretty much expect, that equities are not the flavour. So out they go, out with the bath water. Medusa, St Barbara, Kingsgate, all pretty much the same story here. So we've got record high gold prices, but that's not stopping these from all getting sold off here aggressively. So what opportunities one might consider there, with a moment of clarity and rational thinking? Well, there's a saying that markets can remain irrational longer than you can remain liquid. I think that was Benjamin Franklin that might have coined that phrase, but no pun intended, quote me on that. Let's have a look at a couple of others here. This is Caltex, talking to a couple of clients about this yesterday, in fact. And we've got a dividend coming up, fully franked, 6.3% odd, I think, from memory. That's coming up in early September. We've got crude prices obviously down here. That's one of the major cost inputs for their that impacts on their refiner production. And we're right down near this old level of support here, around the $9 mark. Any sort of tips, and I will say advisedly that you've got to be pretty game in this market to be even considering jumping in, but at some point this stuff will start to look like good value, and fortune will favour the brave. So that's a good one for, I would have thought it's a pretty defensive stock. Everyone's got to keep on motoring around. The airlines have got to keep on filling up their aeroplanes whilst all this activity continues, and it's paying a cracking yield, and this sell-off looks overdone to me. But famous last words there. Just looking at some of these other ones here, reminds me, having mentioned airlines, we look at something like Qantas here, and we look back to the very depths of the GFC. We're actually getting sort of down towards those levels, but passenger volumes haven't dipped that much. We saw passenger volumes come off very substantially during the GFC. We may start to see some of that flow through here, but whatever way you look at it, certainly I think the same conclusion can be drawn under cold, hard light of day and some sobriety. We are getting very low on some of these stocks here. Some of the resource stocks like Iluka here, absolutely great run up, a great business, pretty much exposure exclusively to the growth regions of Asia, but absolutely hammered here. Probably the fundamentals there, it is a great stock. The dividend yield is not that significant, so these tend to get flogged pretty quickly in the day. But any levels back here, this $12 or $14, if that doesn't hold, would strike me as good buying again. But anyway, look, before I start sounding like a schoolboy in a candy shop, we've got to let this volatility come out of the system here, because it's frankly it's dangerous times to be wading in all likelihood. So I've probably banged on enough. We're in for a bit of a day here, so hold on to your hats, fasten your seatbelts, and if you're running any sort of margin or leverage positions, for goodness sake, make sure you've got your stop losses in place, and you know what you're up to, or you've got a hedge in place, and we'll see how the day goes, and good luck, and speak again soon. Bye bye.